You know, in the old days, they used to have a saying, your head against the tracks, you know. And people used to lean down. This is back in the days more of trains, back in the old days, you know, and they used to put their ear on the track to hear what's coming, you know. The vibrations that the train would put into the track could be carried off for miles in front of where the train was coming. You know, it's the same way back when they used to have horses in the old days, and the horses would ride across the plains, and you could hear their hoof prints a long ways off coming. Things were quieter back then. We didn't have all these mobile phones and everything else we have today, all these distractions we have today. Anyway, there's something nasty this way coming. I'm the guy that's got my ear to the ground, you know, and there's something nasty this way coming. And one of the things, well, we're going to get started. We'll open up the charts right here, and we'll take a look. You know, I can't get any information right now on a Deutsche Bank, Commerce Bank merger, right? And the whole thing just dropped off the scene. I mean, okay, look at these stories back. These dates are around December 9th, December 7th. It was all the big thing, a merger between Deutsche Bank and Commerce Bank on December 7th and December 9th. The big stories hit. Nothing now. Quiet about it now. So, went over and take a look today at Deutsche Bank stock, you know, and what do we see here? We see Deutsche Bank stock just going lower and lower. Now, I set a price on this where I think Deutsche Bank stock's just going to basically roll over when it goes below 6. And that's the mark I said. When it goes below 6, I think it's really going to start to slide fast. And we're in that territory. I mean, look. Deutsche Bank, 6.81 euro for a share of Deutsche Bank right now. I think something might have happened. They might have pulled back on this merger. They might have decided, maybe they decided to let Deutsche Bank go down. Because she ain't going up. Let's put it that way. Let's go out and take a look over a 6-month period with Deutsche Bank here. What do you see, you know? Let's go take a look at 1 year. Look, this steady decline. Nothing good. It's just bad, bad, bad. 5 years. Look, just steady, bad, bad, bad. And we'll take a look at the max. Take a look at the max. It's just down, 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 down until it falls over a cliff and dies. I mean, this does not look good for Deutsche Bank. But, you know, if Deutsche Bank goes down, I'm going to tell you they got this huge derivatives book. And okay, I know you have to take a look at the nominal value of these derivatives, and derivatives do counterbalance each other to a certain degree. They're a very weird asset class. I mean, just try to explain a derivatives product to somebody who's not in the financial scene and doesn't understand what it is. Just try to explain it to them. And it's awfully hard to even explain what it is. But these are actually financial products that are a weapon of mass destruction for the financial system, is what they really are. I mean, they're products that derive an awful lot of them anyway, are products that actually derive their value from the underlying asset. They're derived. That's where the word comes from, derivative or derived from. You know, they get their value from the underlying asset that they represent. An awful lot of derivatives anyway. But there's all different kinds of derivatives, and it's such a complicated thing. I mean, but let's suffice to say that there's like $2 quadrillion worth of these things. Quadrillion, not trillion, but quadrillion. So $1,000 trillion worth of these things floating around in the financial system. And I mean, if they all just basically pop simultaneously, well, I mean, it's more than the entire world's GDP, you know. So anyway, let's get back to what we're talking about here. We're talking about Deutsche Bank, and we can see a steady decline in Deutsche Bank here, and it does not look good for Deutsche Bank. Let's take a look now. There's another inversion going on right now while we speak. This right here is a 3-month LIBOR rate, the interbank lending rate for 3 months. And you notice that it's just past 2.8% on the chart. It's heading up towards 3%. If we close in right now, we're looking at about all the way back into 2015. Let's move this chart up and take a look at what's happened more recently with it. in 2018. And what we see is a steady rise in the 3-month LIBOR rate. Now, you got to understand, this is the price to lend money for 3 months between banks. And they're getting exceeding 2.8%. I mean, we got an inversion, because if we take a look at bonds and rates right here, and take a look at the 3 month here, we're looking at 2.42%. So if you buy a bond, they're going to give you 2.42%. But interbank lending, they're getting more. They're getting over 2.8% for interbank lending on a 3 month. So what we see is an inversion. We've seen an inversion quite recently here in this, and it's heading toward a larger inversion, a complete inversion of the yield curve. This could be very problematic, to say the least. Let me open up the chart here, and we will take a look at what the Dow's doing right now. But first, let's get on and take a look at cryptocurrency real quick. We're looking at 37.29 or 37.27, and gee, it's starting to drop right this minute. Okay, we're getting a price drop. We haven't had a price drop for all day, you know, and all of a sudden, just when I look at the chart, we're getting a price drop. A couple red candles forming. Anyway, 37.24. Let's take a look at cryptocurrency market capitalizations today. And what we're looking at is $127 billion market cap, with Bitcoin dominance 52.1%. These coins basically haven't really went anywhere for the last 24 hours. It's just basically sitting there. We're waiting to see what they're going to do. So let's move on and take a look at silver. Silver's up, you know, $15.15. It's up because fear is finally starting to hit investors a little bit. But it's not real big time yet. It's just a little bit. It's a little bit of a nervous feeling in their stomach, you know, so far. That's what's happening. Yesterday alleviated a lot of that fear. Some of them bought into the silver market, and they got right out just as quick as they got in, because they say, oh, well, it's fine. The markets went up 1,000 points. Oh, the trouble's over. Let's go back and sell our silver. You know, they only buy it. They buy it for an hour. And you know what they buy? They buy the derivative product anyway. You know, and they think they're holding silver. That's the way these guys' mentality is. These are the guys, they all got their cell phones and everything, and you know, they're into the modern era, and they think that the paper slip that they hold in their hand is actually entitles them to the real silver product. What they don't realize is when push comes to shove, all those paper contracts are going to be settled in dollars. They're not going to get the real silver in their hand when they really want it. This is a case of musical chairs. There's not enough real silver to go around for all the investors. In fact, that's an understatement. They need about 700 times as much silver as there actually exists for there to be enough silver to go around for all these investors. They would need 700 times more silver. So they would need 700 worlds like Earth with silver on them to supply them with the silver that these investors have paid for. You know? And the thing is it's a game of musical chairs. Which ones are actually going to get? For probably none of them. It's going to be the guy that's already holding physical silver. He's the guy that's going to have some physical silver. All these guys are just going to be holding a slip of paper that's going to be settled in dollars. That's all they got. They haven't got silver. Let's take a look now at the Dow Jones Industrial Average and see what she's doing. She's down 480 points in a day. So already today we've lost half of the gains we made yesterday. I mean, but I think those gains were all just pumped up by the Exchange Stabilization Fund. Just raw new money coming into the market. And now this raw new money is being taken out of the market. It's just going to make the people, it just gives you a chance to get out a little bit easier, you know. You know, and that's what a lot of people did. A lot of people took profit on this market because they were given the money to take profit on, you know, by whoever pumped the market up yesterday. Yeah, you know what the Dow Jones has turned into? A pump and dump. That's what the Dow Jones is now. It's a pump and dump. You know? And basically they've admitted it. I mean, what about legal? Is it actually legal for them to pump and dump? They don't let us pump and dump anything. What is it legal for them to do it? You know, but do it massively. If we're talking about endless money creation, just create 500 million out of, or 500 billion out of thin air here, and 500 billion or a trillion out of thin air there. Who cares? I'll tell you who cares. The bottom line, it is going to affect the value of the dollar. Maybe not exactly today, but that money will filter its way out into the system and create inflation. So that's the bottom line. You know, the bottom line is you're not going to get away with it ultimately. Let's take a look now at oil price. 45.30, down almost 2% down. It's down 92 cents on the day. 45.30. Let's take a look. We looked at bonds and rates, but we'll talk about it a little bit. You know what? We're looking at a yield curve inversion coming here. I don't think it's that far away. We've already had a bit of a yield curve inversion in the bonds. I think it was what, between the 2-year and the 5-year, or was it between the 3-month and the 5? I can't remember now. But anyway, we had a little bit of a yield curve inversion, but it wasn't a full all-out inversion. I think we're going to get the full all-out inversion of the yield here, coming up pretty soon. And that's a sure sign of recession ahead. But this time, you know, they keep talking recession. We hear all this talk about recession. What's coming is a depression. We got a depression coming. They hate to use a depression word. Why is that? I don't know. Let's take a look at the U.S. dollar index. 96.61, you know. Anyway, listen, thank you guys for listening to this report. And today is Thursday. We'll see. We're going to have to keep a close eye on these markets. Honest to God, we're going to have to keep a close eye, really. On this Dow Jones, we're really going to have to keep a close eye on it. What's it now? 491. I think it's going to end the day down today. I don't think the plunge protection team's going to come in to save the day today, or probably tomorrow either. I think they've blown off their fireworks, and they were a one-hit wonder. That's what I think, honestly. To be honest, I don't think that they can continue to do that day after day after day. I think the market's going to, if it continues to roll over like this, we're going to head into the crisis anyway. You got to understand, the same thing happened back in the 1929 crash. They came in for one day, right in the middle of it, and they propped it up, but then it continued to fall after. And, you know, we got this crash underway, and we started and everything, and they came in for a day. They did their thing for a day. They blew I'm just guessing. I'm total guess. 500 billion maybe. And now they're gone. And who's going to be there to catch the crying people who are going to... All I can say is they better put bars on all the windows in the buildings on Wall Street, you know. That's in maybe a couple more weeks. They might need bars on all the windows on Wall Street. And this is not a good situation. And we got Deutsche Bank probably rolling over, and we don't hear nothing about this Commerce Bank merger anymore. Deutsche Bank's just rolling over and dying. Take a look, you know. I mean, take a look. It's just down, 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 down. It's down to 6.79 euros. Can you believe that price? Okay, bye-bye, guys.